2025 just closed and it quietly made real estate history, not because prices crashed, not because sales surged, but because Metro Vancouver recorded the lowest annual home sale total in over 25 years. That's not a headline meant to scare you, it's a signal. And today I want to break down what actually happened in 2025, why this market stalled the way it did, and most importantly, what this sets up for buyers and sellers heading into this year. So before we get into it, guys, I'm Ryan McMillan, local real estate agent here in Vancouver. I help people buy and sell homes. If you're interested in jumping on a call with me, all my links are in the description. QR codes on the screen right there. Also, if you've been watching the channel, you've been riding with the channel for a bit, and you've been liking what you're seeing, make sure you go down and subscribe to the channel. Also, comment in the video. I want to hear what you guys think. How was 2025 for you? Were you on the sidelines? Were you trying to sell? How did that look for you? Drop a comment or respond to all comments. So let's get into the video right now. Let's start with the facts. In 2025, Metro Vancouver recorded 23,800 total home sales. That's down 10.4% from 2024, down 9.3% from 2023, and nearly 25% below the 10-year average. To put that in perspective, this was the lowest annual sales total in more than 2 decades. And here's the part that really matters. This wasn't because nobody wanted to sell. The real story, record listings, record stall. In fact, sellers were very active. 2025 saw over 65,000 new listings hit the market. That's higher than 2024, higher than 2023, and the highest total we've seen since the mid 1990s, even higher than 2008. So this wasn't a supply shortage at all. This was a demand freeze. Sellers showed up, buyers hesitated. And that mismatch defined basically all of 2025. Why 2025 stalled? So let's talk about that without any of the hype. First, there were three main forces at play. There was the affordability shock. Rates rose fast, and even though borrowing costs started easing later in the year, the damage to confidence, it was already done. And then second, you had basically all that uncertainty. You had the trade tensions, economic headlines, renewal anxiety made buyers cautious. People didn't walk away. They stood back and paused. And third, choice overload. When inventory climbs and urgency disappears, then psychology-wise, buyers just take their time. So 2025 wasn't a crash year, but it was a wait and see year. Let's tie this in with the inventory levels, so the lever everyone ignores. So by the end of 2020, by the end of the year, active listings sat around 12,550 homes. That was nearly 15% higher than the year prior and about 35% above the 10-year national seasonal average. So this matters because inventory doesn't just affect pricing, it starts to affect buyer psychology. More choice means longer decision cycles. You always have more negotiations, less emotional bidding. In fact, hardly any emotional bidding at all. This is no longer a market where just list it works. Just does not work anymore. So let's look at the adjustment. Prices didn't collapse, but they did start to adjust, especially in the latter half of the year. The benchmark price across all property types now sits around 1.11 million. That's down 4.5% year over year, slightly softer month over month. Detached homes saw the biggest pressure. Apartments and townhomes held up a little better, but they did soften. And again, the inventory record high. This wasn't panic selling. This was pricing reality slowly setting in. So let's now fast forward and take a look at the sales to active ratio where the market really is. Here's one of the most important metrics some people start to really ignore. The sales to active listing ratio in December sat around just above 12%. So if we kind of break that down into subcategories, the detached homes were 9.3, townhomes 14.6, and condos just over 15%. Historically, like we've mentioned before, anything below 12% equals a lot of downward pressure. Above 20% upward pressure, we saw nowhere near that. So where are we? We're not crashing, but we're not rebounding. We're in a balance buyer leaning market, especially for detached homes. So that's where we're really sitting. But what does this mean now for the setting up of this year? So this is where things get really interesting. 2025 didn't reset the market through chaos. It reset it through a lot of fatigue. Sellers were tired of waiting. Buyers tired of sitting on the sidelines. Borrowing costs are now stabilized. Prices are softer and inventory is still very high. That combination hasn't existed in years. 2026 doesn't need a boom to move. It just needs confidence to return. That's the biggest thing we have to look at. Where is the buyer's confidence coming from? If you're a buyer, this is what matters, right? You're walking into, again, you're going to have more choice, more leverage, barely any bidding wars, more negotiable terms. But the mistake buyers make now is waiting for the perfect signal. Start getting active now. The best buying windows don't feel obvious, they feel uncomfortable. In 2026, smart buyers will focus on value, not the headlines. They're going to negotiate hard on homes that linger, act decisively when quality shows up, and opportunity doesn't come with the fireworks, guys. It comes quietly. So if we flip it and say, okay, if you're a seller in 2026, for sellers, the rules have changed. Pricing is no longer aspirational, it's competitive. It's competitive with the seller down the street from you. Homes that sell in this market do three things well. They're priced correctly from day one. Guys, let me be clear. Like I mentioned prior, this isn't a market to test. If you want to sell, if you're serious about selling, you have to be precise and sharp on your pricing from the first day. That first window is the most important. So if we are going to list your home, we have to strategize, and the pricing in this market is the number one key. And you cannot be off by just a little bit. Just say, well, maybe we can test and get a little more money. It just does not work. Data is king in this market. You have to look at the data, and then with your real estate agent, you have to strategically say, okay, now where do we want to be in this market? How do we want to get ahead of the game and price to be competitive? That is the number one thing. Also, they're presented exceptionally well, and you are also flexible in terms. The sellers who struggle are the ones who are anchored to 2021 and 2022 expectations. The sellers who win understand this: you don't need yesterday's market, you need today's buyers. And that is the three key takeaways that I just mentioned is going to get you ahead. So look, 2025 wasn't a failure year. It's just that one of those transition years. It really, what it did was flush out unrealistic expectations and really start to reset behavior really on both sides of the ball. 2026 isn't about guessing the bottom or even chasing the top. It's about your strategy. So if you're buying, selling, or you're just trying to understand what this market means for you personally, comment 2026 in the comments, or market, and I'll walk you through what this looks like for your situation. And like I said, I'm always available to break it down further with a strategy call. Like I said, guys, everything's in the description, all the links. Appreciate you guys making it to the end of the video. More videos coming up in this week, so stick around. Subscribe to the channel, hit the notification bell so you know when the videos are coming up, and we'll see you guys on the next video.